Here we go. Stocks by the numbers. Welcome back. Quick update here on Supermicro Computer Incorporated, symbol SMCI here on the NASDAQ. Just something I noticed in the technicals. I just wanted to make a quick video. Stock closed 40.64, down about a point, roughly 2.5%. You can see after hours up a couple of cents. But I just noticed we do have a potential, what looks like a head and shoulders potentially forming here. And this, if we look at stock charts in a second, I'll show you, this potential neckline is actually kind of basically the moving average as well. And we could potentially have a break back down to one of these support levels, maybe right around 37, maybe slightly lower, or even here, maybe about 36.40. Now, of course, not guaranteed until it happens, but if this does happen, I'm just pointing out, a level we could potentially drop to if this does end up panning out. However, the MACD looks like it might be ready to cross to the upside. So, we'll see what happens, but it's just something I noticed in the chart. Investor alert. Here we go. Slashed its rating. Cited intense competition. Goldman Sachs cited intense competition and valuation concerns as he downgraded SMCI stock to sell and trimmed his price target on the AI server company to $32. His downwardly revised target warns of another 23% decline in shares. Call arrives only a month after SMCI filed its pending financial reports to regain compliance. Supermicro's rivals have been investing rather aggressively in research and development to build products that are less differentiated from SMCI's. This will lead to pressure on the company's market share. But again, the company reported earnings and they mentioned that 30% of all new servers coming online, they're going to be involved in. And I know people were posting the articles of them working on the XAI servers, I believe they were. So that's why, again, as I said, until I see that the orders are not coming in, the business is not coming in, people are no longer doing business with them, until that actually happens, and we start to see the revenue really chunk down and miss estimates, then in my opinion, I still say that the stock is on sale, and I maintain my personal long-term price target, still holding at $200 a share. This downgrade to $32 a share, I mean, I guess I can appreciate their concerns, but again, if these other companies supposedly just started investing rather aggressively into the R&D on their end, then we probably still have time before they would, right, develop anything that could potentially impede on Supermicro's market share and actually take it away from them. So I don't know if I would view that as like an instantaneous short-term negative. So I don't know, maybe we got to go down the rabbit hole and make the assumption that this person over here at Goldman lowered the price target so someone else could buy it. Who knows? Someone also, I forgot who it was, but someone, I think it was JJ, someone in the Discord posted after that news hit of the Goldman Sachs rating downgrade. Someone posted that he used to work at Ernst Young, I think, which, if you recall, was the accounting firm that Supermicro supposedly parted ways with. So that, that's just something to keep in mind. Amidst rising competition from OEMs as well as ODMs, Supermicro could fail to deliver on its promise of $40 billion in revenue in fiscal 26. Yeah, okay, but as we always said, it's about the growth in general, right? So if they're talking about growing from 7 to 15 to 28 to 40, and they end up growing to 38.5 billion, like, you know what I'm saying? Like, are you really gonna look down on them because they missed that mark? It's like, that's what they're saying now based on current projections, growth. They're projecting the type of demand that's going to come in over the next couple of years, and they're laying out that they're on track and could potentially see 40 billion. So they failed to deliver. That's what I mean. If we fast forward in 26 and they posted like 32 billion, then yeah, we can say they missed the mark completely. They overpromised, they underdelivered, right? But if we say 40 billion and we fast forward and it's like, 38.7, 39.1, it's like, I don't really know if I would necessarily view that as a big negative. Almost similar to what we saw with AMD, right? They saw what, 69% growth year over year, but it wasn't enough. They expected 74% growth or whatever the heck. You know what I'm saying? And it's like something like that. It's like if you want to bring them down on the news, like yeah, I guess, but at the same time, like the growth is there, the business is still there. So given some time, it should climb back up, right? So I don't know if I'd bank on this type of analysis here. Supermicro stocks currently going for about 16 times its estimated earnings for 2025, dubbed an, quote, unfavorable risk reward in his report. I don't know about that. Again, if we go into something, especially like SMCI, but stocks in general, you long-term investors know, as we said, you have to deal with the short-term volatility to look for the long-term growth. So even now, if you bought stock hypothetically at 40, and it pulled back, and let's just say it did sell off over the next several months and it drops to 32. Okay, fine. You are down, what, 1/5? Which is 20%. Okay, so your stock's down 20%. But again, let's just say hypothetically the business hasn't changed and the stock has just been down for several months. Chances are, as time goes on and we, start to see these increasing revenue and demand come in, then chances are the stock is probably going to make its way back up to 40 plus, right? So in the long term, in my opinion, it's not going to be an issue. In the immediate short term, if it does pull back, all right, fine, whatever. You bought a stock, it happened to drop 15, 20%, and then, it bottomed out, it started to rebound, now you're only down 4% or something. You know what I'm saying? You and I both know how this works by now. So that's why, again, a pullback to 32, not worth the risk reward. In my opinion, it is. Because if we, over the next year or two, really do start to see numbers like this on the way to 40 billion, then yeah, I don't know what this person's talking about. You're talking about 20% to the downside for potentially like 150% to the upside. Even if the stock, again, doesn't go back to the highs of 122 or whatever it was. I mean, we laid out the numbers. We can easily double up from here, get back to 80. There were even some people who were saying, oh, conservatively, if I turn around in a year or two and it's back at $90, $100, I'll be more than happy. That'll be a huge profit for me. So that's what I'm saying. Even people who see the growth in demand that they're laying out, even those people are saying, oh, it's $70, $80, $100, really shouldn't be an issue. So think about that. It could drop potentially 8 points from here. This guy's warning everybody, telling them, oh, it's a sell, it's a sell. But meanwhile, the upside is, what, 75%, 100%, 100 plus percent? How is the risk not worth, how is that unfavorable? Right? So that's what I mean. Sometimes, again, a situation like this, in my eyes, sometimes you got to take a step back. Simple logic and common sense sometimes trumps all. But we know, again, these analysts, what's going on behind the scenes, behind closed doors. Every time someone comes out and talks about a stock, you have to take it with a grain of salt, because who knows what their angle is. But expects continued investments aimed at introducing new features to weigh on SMCI's gross margins. He sees the metric contracting to 12.2% this year and further to 11.7% in 2026. Can you believe it? On Monday, lowered EPS estimates, adding investors are better off selling the AI stock into the strength, since it may fall further in the coming months. What did I just say? Over the next couple of months, it could drop 8 points, but then what? Right? But then what? So that's what I mean. You get involved into a stock January, February, when the bull drops, new year, new you. And then what? You're going to turn around in June, take a 25% loss. And then you're going to turn around Thanksgiving, and the stock's going to be up at, $76. And you're going to say, oh, my goodness, if I just held the stock. Right? So what are we talking about? What are we talking about? And anyone who's not playing options and is holding shares and could see a drop over the next couple of months, that's what I mean. The normal person, unless the business is struggling, is probably going to hang on to the shares and say, all right, and, when they come back, that'll eliminate the stress, and if I want to sell for a profit, I'll sell. Right? Unless you really need the money and you got to lock in the loss because you need that cash. But highly doubtful for most of us. Highly doubtful. Goldman Sachs earnings estimate for Supermicro now sit well below the consensus for 25, as well as for each of the next 2 years. Other analysts disagree. Goldman Sachs has investors should note that Goldman Sachs has a bit of a contrarian view on Supermicro stock. While the firm turned bearish this morning, the consensus rating on Supermicro remains at moderate buy with the mean target of about $58, indicating potential upside of roughly 40% from current levels. And again, as I said, this has all been lowered because the stock took a hit and dropped, 70% from the highs or whatever the heck happened. That is it. End of story. Right? And we got the Hindenburg research news, and then it turned out they were doing the shady crap, even though they were pointing the finger at like 5 other companies, getting their friends to buy them all at discounts or whatever the heck's going on over there. Right? So that's what I mean. Through all of this, we still have the bulk of price targets significantly higher than where the stock is. So can it go down? Yeah, of course. I just showed you a potential head and shoulders pattern that could be ready to break in the next day or two. And we can see a 10% drop almost immediately back to one of our trend lines. But again, the long-term growth, depending on how you're looking at it, I think it's definitely worth the risk to reward ratio, if you will. I don't know how this person can say what he's saying unfavorable. I don't agree with that at all. But again, that's just me. That's just me. I know people still comment on the SMCI videos that, they don't really feel comfortable with SMCI and they might invest into whatever, like Intel or something else. Like, totally understandable. Again, I can appreciate where you're coming from. Not every stock is for every person, right? We're talking about tariffs. Apparently that's going to affect every single business. We don't know. We get news on tariffs, stocks drop, and then we hear tariffs, the deadline's extended, and then stocks go up, and then, Trump gets upset, talks about tariffs again, then stocks go down. So we understand we're in a very delicate market right now. So you do have to be careful out there. Deal with that volatility. Again, we have some tariffs scheduled to take effect on April 2nd, as you see here. Yields have been up. And again, if our dollar continues to climb and our yields continue to climb, technically that means that stocks should continue to sell off. But again, you have to take it day by day. S&P Global. Yeah. $32 price target. Ridiculous. Technically, look, the company just, right, over the last couple of months, the company was well below that. The company came down, tested a trend line here, broke below 35, had a little bit of a bounce. That's what I mean. In my eyes, how long are they going to continue to beat up this company? But I'm telling you, we may turn around 2-3 years from now. This stock may be an absolute beast of a powerhouse. And we might all look back and remember days like this. And say, oh yeah, they were doing some nonsense to keep the stock down. But again, we'll see what happens. RSI middle of the road here at about 50. Again, you can see this is what I wanted to show you. See how we had the big drop down right to the 50-day moving average, and then you can see a little bump, and then the bigger bump, and then we have another little potential bump forming. So again, it's not set in stone. It's just what it kind of looked like to me, but it does look like it was bouncing nicely off of the 50-day moving average. This bottom Bollinger Band, again, moving up, top Bollinger Band moving down. We're getting the tightening taking place. So again, we could have a potential quick drop again back down and then bounce and then pop up and kind of retest the high 40s here and get back to this 200-day moving average, 48.5. But we'll see again. But just the bounces off that moving average, which again kind of lines up here with this neckline of a potential head and shoulders forming. And again, a break maybe down here a couple of points to some of these trend lines. I just wanted to just bring that to everyone's attention again, because if it does happen, at least you might, have kind of an idea of where it could go, where it could potentially be stopping, right? Where a rebound might start. So that's why I like doing the updates. The MACD, though, again, this is what I was talking about. Look at that MACD, just about ready to touch and potentially cross. So that's what I mean. Are we potentially forming this last shoulder to where we meet and then reject and drop and break? Or are we going to just come back down, test the moving average, and then have a MACD cross, and it's going to bounce and spike up off of the moving average? You understand? So we have to kind of wait and see how that one pans out. But that MACD could potentially be the leading indicator right now in this moment as to where this stock wants to pop or drop in the immediate short term anyway. RSI here on the weekly time frame at 49. We bounced a couple of weeks ago. We're still above the mid-Bollinger Band, about 36.60. And let me see if we break. Yeah, I mean, again, if we do happen to break, soon over the next couple of days, you could see this trend line's about 36.5, 36.60. You got that mid-Bollinger Band. You could potentially see a 10% drop, right? Which might cause this MACD on the weekly to kind of come down and touch, and then it might bounce and rebound, right? So we have to kind of see how it plays out. But you can see we had the big curl now on this 50-day moving average, and it's sitting there above 50. It's at 53.01. Top Bollinger Band 52.08. So that's why if we do happen to drop and test and then have a big rebound, we could potentially see 50 plus over maybe, I want to say, the next 2 to 3 weeks. Because we do have room to run. And it does look like we're kind of slowly stepping up, right? So we'll see how that plays out. But again, it's just something I saw. So I just wanted to jump on. Just let you know what I saw. Last year looks like we had a pivot point essentially right where the stock is right now. Technically higher pivot point up here, a touch below 58. We're looking at the weekly, right? Let's look at the daily. Look at that tightening. This pivot point, 44.54, 10% upside. 50-day moving average is here at 38.74. And then we... Wait a minute. Let me see. What was this previous? 35.80 maybe? About 36. See that? I'm looking at the previous pivot point for last month in February. But I don't know, it is kind of channeling up again. I do have a feeling it breaks down before it breaks up. But overall, I mean, I stated my case. You guys know how I feel about this one, but gonna have to keep an eye on that MACD. And if it's quiet tomorrow and then makes its move, in a day or two, then maybe we'll jump on and we'll recheck some of the technicals together, and we'll see what we got right and what we got wrong, But again, the markets are volatile and they are sensitive right now, and you've seen that. So, a situation like this, we might wake up tomorrow just red across the board, so we just break down, and it technically, like we might have saw the pattern, but also at the same time, the market kind of helped play that one out, right? But again, today, I mean, markets were red and we ended up closing green, right? So that's what I mean. You never know what's going to happen. So as I said, we might just potentially be coming down and testing this level again, and then we're just going to have a nice bounce and spike back up. So only time will tell, but I wanted to go over, what the person at Goldman said. $32 price target, imagine. Again, even if it does, who cares? But that's just me. Obviously, if you're trading options daily on SMCI, then, it matters. Matters a lot to you. But, nothing else, I don't think, right? JPMorgan upgrade, what was this? Did we look at this? JPMorgan upgraded the company to neutral from underweight, raised its price target to 45 from 35, right? So that's what I'm saying. Beautiful. That right there, beautiful. They see that the stock may have potentially bottomed out. They see that it's kind of trying to hold this 40 range. They were at 35, so they bumped it up to 45. Still being ultra conservative, but also kind of realistic, right? It's a growing tech stock that everyone's paying attention to. A lot of people are buying shares on the dip. So yeah, it's here at, 39.40 at the time. So it could go up, 10, 12%. Yeah, okay, fair enough. Very conservative. Lowering to 32, though, again, that's just laughable in my opinion. I mean, it might be right. Who knows? If it hits 32, guy might get a raise or something like that. I have no idea. I might get a bonus. But I don't know. I don't know. I can almost guarantee there's a bunch of brokers over at Goldman Sachs that read that report and probably said, if we do happen to see that stock down at that price, I'm going to call up Mr. and Mrs. So-and-so and tell them, let's take a position. Now's the time. So if it does, again, drop down to 32, I'm curious to see if it just instantly rages from that point. Upgrade SMCI appears to have overcome prior SEC filing challenges, benefiting from increased demand for its Blackwell-based server shipments. JPMorgan analysts pointed to higher average selling prices that are bolstering revenue growth. However, they caution that intense competition and elevated expenses to strengthen internal controls could pressure margins. Should technically be a hurdle they have to get over, but it should be a short-term hurdle in my opinion. The Wall Street firm lifted its fiscal year 26 revenue forecast for SMCI from $34 billion to $39 billion, right? What did I say? Even if they post $38, $39 billion, they'd be close. It wouldn't be that bad. So JPMorgan estimating they're going to come slightly shy in at $39 billion. But again, still tremendous growth year over year in revenue. I mean, it can't be denied. Buoyed by an improved supply ramp from NVIDIA, yes. Additionally, JPMorgan raised its December 2025 price target for SMCI to $45, up from the previous target, applying a 10x earnings multiple versus the former 9x multiple. Okay. Nevertheless, the bank maintains modest discount. Dell trading at an 11x multiple due to historical filing challenges. CFO change, ongoing Department of Justice investigation. Again, Dell trading at a slightly higher multiple. Again, I mentioned, go look at the debt on Dell. We looked at it. And the fact that they were blowing Dell so much as SMCI was kind of just breaking up and out through the stratosphere, all of a sudden, SMCI became kind of like the ugly stepchild, and Dell was getting all the attention. Even though SMCI, technically, in my eyes, is much more fundamentally sound, or financially healthy, if you will, I guess. Expect economic growth to slow down. Talks about the price target again. Midday gainers. JPMorgan shifts to neutral. JPMorgan. Talking about the SEC. Still talking about that. Still talking about it. Rates unchanged. Okay. But yeah, just a couple of technicals I wanted to show you, because I know a lot of people are holding it. A lot of people are trading this. So figured I'd take a quick look at it. Again, analysts, these people that were looking for 39 billion, 40 billion over the next 2 years. Market cap right now, 24 billion. SMCI sitting a touch below $41 a share. But that's pretty much it. I'll end it there. So once again, Stocks by the Numbers. I want to thank you for stopping by. If you have any questions, comments, or concerns, drop it down in the comment section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.